it's people's policy, shouldn't the people be at the center of it? It's been 15 years. Why is my city still underwater? Why should it be hard to withdraw my hard-earned money? Why do I have to run to 5 hospitals to find a bed? How many of us have to be raped before they start caring? Have humans lost their humanity? This night curfew has been on for years. Will this lockdown ever end? The questions on your mind are the ones we ask. The most important voice of the nation finally gets heard. Your voice, your views, your news. Mirror now, you.
So the dynamic voice that you just heard right now was none other than Ms. Tanvi Shukla, the face of news reporting and the moderator and host for today's Leadership Summit 2020. Good evening, everyone. I, Brahmjot Singh, on behalf of Students Alumni Cell, IIT Kharagpur, welcome you all to the Leadership Summit 2020, a legacy to cherish. So today we will be witnessing one of the most eminent personalities that the Institute has ever nurtured over the years. To begin with, I would like to introduce you all to Ms. Tanvi Shukla, the host for today's event. So, Ms. Tanvi Shukla is the news editor at Mirror Now, and as the news editor at Mirror Now, she hosts the channel's primetime show. Apart from it, prior to her role at Mirror Now, she was at Times Now, where she anchored India's most watched news show, The News Hour. Apart from it, she has also been associated with CNBC TV 18 and DNA Money. Her rich experience in covering business and economy adds a unique facet to her personality. So with this, I would like to hand over the stage to Ms. Tanvi to take over the event. Over to you, ma'am.
Thank you, Ramjo. Thank you so much. And a big welcome to everybody who's joining us at this Leadership Summit. Thank you so much for being with us. The Leadership Summit actually provides a medium for renowned names to interact with the aspiring youth and provide them insights to help them move up the competitive ladder with success. That's essentially the idea behind the summit that IIT holds every year. They push these young, impressionable minds to scale new heights and motivate them to achieve their dreams. Now, most of you are obviously very well aware of the rich alumni legacy. In fact, has produced a plethora of some of the most innovative, imaginative minds over the decades, which have contributed immensely to bringing the nation to new glory. So here we are to see the same spark under the leadership that has ignited the minds of many and impacted the financial world, the world of finance and economics. And truly, I think our panel this evening is reflective of that. Experts and panelists, alumni of IIT Kharagpur joining us from across the world, from various corners of the world. Now, in this all-new edition of the Leadership Summit 2020, we are honored to host some of the most esteemed alumni of IIT Kharagpur, successful individuals in the field of finance and economics. I take the honor of introducing today's panelists. Shayan Das. Mr. Das graduated from IIT Kharagpur in 1992. He then went on to do his MBA from IIM Calcutta and graduated in 94 from there. He brings in more than 25 years of valuable and diversified financial sector experience, having worked in a ratings agency Crystal as well as global banks such as ANZ, ABN AMRO, RBS, and currently with SocGen. He's been in client organizations seeing ever-changing dynamics requirements of clients in investment banking space. He's also seen global. This has obviously helped him to constantly upgrade his skills to stay relevant to clients as a valuable advisor. Let's also say good evening to Rahul Vishal Sinha. Mr. Sinha graduated in the year 1997 from the Department of Electrical Engineering. He's now the MD at the Structured Credit Investments at Apollo Global Management with 10 years of experience in mortgage investments and analysis. He's previously worked at IndyMac Bank in various structured product roles, including portfolio management and quantitative analysis. We'll also say good evening to Sudipto Day. Mr. Day graduated in the year 2000 with BTech in Mechanical Engineering. He also did his MS and then PhD in Computational Science and Mechanical Engineering from the University of Illinois. He is the CFA charter holder and currently the head of Equity Risk Management at Lord Abbett and Company, LLC. He has more than 6 years of experience as Vice President and Executive Director at Goldman Sachs. We say good evening to Nitin Arora. Mr. Arora graduated from the Department of Chemical Engineering. This was in year 2001. He also completed his MBA from SP Jain Institute of Management and Research, and then went on to do his Chartered Financial Analyst program in 2007. He started his career as a structured finance analyst at Moody's. And then he became a financial analyst at Executive Noble, followed by taking a position of director at HSBC, where he looked after equity research analysis, covering diversified financial in the UK and also co-covering European investment banks. He's currently working as a fund manager and an analyst at the Lazard Asset Management. We say good evening to Animo Saxena. Mr. Saxena graduated from the Aerospace Engineering Department in 2006. He's currently the Chief Investment Officer at Gromor Group, where he manages the group's investment portfolio, overseeing deal origination, transaction management, and fund activities. He started his career with the corporate finance M&A team of an Indian conglomerate, and he's worked for the transactionary advisory practice at KPMG. He's also managed over $6 million assets under management at Abu Dhabi Financial Group and has been associated with proprietary investment management of family office portfolios in the UAE. He's currently the ED at Gromor Asset Management Limited, also a board member of several other portfolio companies. I welcome you all. We are hoping that we also have former RBI Governor Mr. Subbarao joining us. There's a bit of a technical glitch that he is facing, but all of us from the audience to the panelists are hoping that we have him with us in just a bit. Quick disclaimer. You've patiently heard me so far. Just one more bit, quick disclaimer. The panelists here present are the alumni at this eminent institution. The opinions presented are their personal views and hence do not hold any resemblance with the organization that they may have been with or are currently part of. I thought that was important to just highlight that. Good evening to everybody. The theme that's been given to us is financial inclusion, the challenges and barriers. I think one of the most talked about conversation points we have, especially in a country like ours, where still, after decades of banking and speaking about opening up the economy and reaching out to people in rural areas, we still have a long way to go when it comes to financial inclusion. The current government, of course, has done a lot. This has been one of their big talking points, big focus areas, and they have launched several schemes. But today I want to hear from all of you, and I think that's what even our youngsters want, to hear from those various parts of the financial fields to help us understand how we can go about it. So if I can start with Mr. Das, let's begin with you, since you have a great amount of experience in this sector. In the current systems and the way the policies are placed and functional, Mr. Das, are we moving in direction of decreasing the inequalities in a system, or are we still far from that?
My personal view is that technology always helps. Despite the sort of skeptical approach sometimes we have both individually and collectively in the country. So any technology, even though it's disruptive in the beginning, in the long run, it is definitely beneficial for consumers in particular. Also in the short run as well, the people who are disrupted are the producers and not the consumers. So it is the providers who suffer disruption in the short run, and it only encourages competition, expands the market, and it's only good for the consumer. Not only that, some of the initiatives which we are discussing today, which are mentioned in the script, actually they are completely dependent on technology. And what technology helps is in building scale, which is difficult to build manually or in a brick and mortar model. So in banking, for instance, reaching out to more and more people is difficult by opening branches, because each branch is very expensive to maintain and it's sometimes not profitable. But with the advent of technology, what happens is that hurdle somewhat goes. And in many ways, we have seen in last 5 to 6 years, technology, in fact, reaching rural areas, penetrating to customers, helping banks to do KYCs based on eKYC mode, and newer forms of disintermediation, So I think it takes a little bit of time for people to understand that, and the existing players do get disrupted. But I strongly feel that it is going to help in bridging the inequality gap.
Okay, Mr. Sinha, do you have a view on this? And there are various parts and stages of it. On one hand, the world is talking about cryptocurrency, talking about using, e-wallet, digital payments, a lot more. While in the rural areas, still maybe how do you see us
I believe
in a inclusion where all aspects of a country as diverse as ours can be included?
in between you broke up a little, but I'm guessing you're talking about financial inclusion with respect to digital currency as well as cryptocurrency and so on. Uh, and along the lines of what Science been talking about, I agree. Technology, for that matter, has always been towards the democratization uh, of the society. So it's not just about, yeah, there's a new technology coming and hence let's adopt it. Usually, all those changes that basically percolate through the system are always there because there's a demand for it, and that demand is going to drive the growth of any new sector, any new technology, any new solution. And that's how I think about it. Anytime there's a new solution out there, there's a reason for that. And here, I mean, if I look back in time, usually all these changes have come in the form of improving the efficiency, improving the scale, and so on. And as I look back, I think about credit cards. I think right now we talk about Paytm, but credit card was the new technology back in the day, and now it's 100% adopted. Everybody's using it in one form or the other. So yeah, I mean, this definitely is going to be more inclusive. It's going to increase access. And one way to think about it is also like I remember when I was in Kharagpur, and I would go to the canteen to get my egg bhurji at 11 o'clock in the night. I would not be carrying cash on me all the time. I would literally be going and saying, "Okay, put my name in the register and move on." So I think of credit cards as nothing different from that, where I just swipe my card and make my payment and on a monthly basis. And the way I think about Paytm, it basically provides access to people who previously did not have access to banks. Similarly, as I'm looking at cryptocurrency, it's possibly the same thing. Although the one thing that I would like to highlight is when we talk about something as extreme or as cutting edge as crypto, we have to consider the scale of the economy, where we are looking at the total money in the system versus what cryptocurrency represents. And there's a long way to go. So it's more of an evolving process. So definitely it's going to go into a direction where people are willing to adopt it, people are willing to trust it. Otherwise, the technology is going to possibly fall apart. Like a lot of those old technologies that came in, and if they were not catering to a particular solution, then they just fell by and the world moved on.
Sudipto Day, a big challenge even for the financial sector and for the banking sector, especially in a country like India, where yes, the mobile connectivity and the mobile accessibility has reached even to the smallest of the villages and the most interior of the parts. But they're still not into the banking system as an active part. Now, unlike the West, we've skipped a few stages. We never went to the credit card stage before we went to the digital wallet stage. So, for the Indian market, how do you see this moving from here on?
Sure. In fact, I would think the fact that you're skipping directly from a cash to the mobile money stage is actually, you can think of it as a positive. Like all the developed nations like USA and the Europe, they have moved from cash to credit card, and now from credit card they're moving to, like, let's see, the mobile banking aspect of it. So that has actually, like, if you look at kind of study the effect in those countries, there have been frictions, right? Because like there are some parties would be interested in keeping the credit card process going. So there are frictions where people who try to say, let's keep credit cards and let's push back mobile money and those aspects to a later on. Whereas on India, you're starting with a clean slate, right? I take back that there definitely credit card usage has gone up, but it's not so matured as you see in the Europe or UK, so the US. So starting with a clean slate is a big positive, I think, for India to move into that direction. And given that the percentage of people in India using the mobile phone, the cellular network, I mean, my understanding is the penetration is pretty high. So switching to that mode would be much more easier. I'd just like to give you a quick analogy. Like in the US, if you think of rural banking, like the way it was developed was, long back, using community banks. Now, over time, this community banks lagged the big banks because just as, everybody, as Kunal and Sayan is mentioning, it's the economy of scale. Like big banks were able to utilize technology, leverage that, and the cost went down, but the community banks lagged behind. So definitely, technology plays a big role whenever it comes to, whether it comes to financial inclusion or expanding the footprint. So on that aspect, I'd say, since we're talking about the financial inclusion in India, the other aspect there is basically it's not just the rural versus urban. Like when companies are focusing towards that, it's also the male female the diversity. Like you need to keep in mind. Like I think there was a study which showed when you go to the rural areas, it's basically how accessible this the mobile money would be to the male versus the female in those areas. So basically, when you're trying to develop these plans, you have to be very, the value proposition has to be very customized. You need to look at, what exactly is needed. Like maybe in northern India, like the rural banking should be developed very different from southern, like more agricultural tilts and things like that. So in terms of, India's development on the technology side, I think, again, I'm sitting in the US. I don't want to claim myself to be a big expert here, but I think the UPI and the Aadhaar card system, like those are good steps which can eventually, help propagation of, financial inclusion in the rural sectors in India.
The other aspect that I wanted to talk about is the way our economy has shaped up. And, I think for everyone, it was a bit of a shock to see a GDP contract by 24%, although the next quarter wasn't as bad as 24%. Nevertheless, India's economy is shrinking worse than what United States is seeing, or worse than what Italy is seeing, the other two countries that have been badly impacted. We don't see that, Nitin, in being reflected in the markets for some reason. To the extent that one would imagine now. Why is that? Why is that the bulk of the market doesn't seem to be reacting to it?
Yeah, good question, Tanvi. I think hindsight is beautiful when we look at India, lost 25% of GDP in a quarter. Oh my God, what have they done? Yeah. But let's not forget that these were unprecedented times. No one had a clue. There was no written format or a template. For other crises, we have a template how to deal with it. But for this one, there was no template. And the biggest issue with this pandemic was, density. It was spreading like mad. And India, it's so densely populated. If you were not putting the economy in a shutdown, we could have been a lot worse in terms of mortality than where we are today. So we can look at US where, the GDP shrank a lot lower, 8-9%, 8-9% in Q2, maybe Sudipto and Rahul can help me there, the exact numbers. But you think about US, they never shut down. Why? Because you look at the area of the land, it's as big as China, but the population is quarter of China. So wherever things are spreading, you shut down those pockets and you can put some controls. Now that is debatable, how far did they go or not. But I think the first step which India took was probably the right one. UK, you look at it, we went into a very harsh lockdown. Our GDP contracted 20%. But now, again, I would say now you look at it in Europe, Italy, UK, the number of cases we are seeing, the second wave of the pandemic are probably 4 to 5 times the first peak. But the mortality rates now are a fraction of what we saw at that time. So now we know the template, yeah, how to deal with it. We can test, identify the people, isolate them quickly. So now economies are opening, functioning. The impact, when we speak to corporates, they say the impact of the second lockdown, which we are seeing, is significantly lower than what we saw in the first time, because it was not only the governments, it was consumer, it was everyone who was in a shop and had no clue what to do. So yeah, 25% number looks horrible, but in the context of time, what was happening there, I think it's not the way we went down. I think the same way we are going to go up, and that's what is being probably reflected in the markets now.
So, Animesh, why don't you sort of take it forward?
Sure, I'll try to build upon. I have the advantage to build upon what all of you guys have said. Um, so I'll try to bring a perspective of the office, which has been for the past couple of years acquiring a lot of banks and financial institutions in different parts of the world. So, sort of contributing as an investor to different smaller economies, and we look at the and we did do this during the pandemic. Since we are a zero debt family office, we have the advantage of positive cash flows to continue to invest during these times. And when we look at the financial systems of different economies, and when we are cherry picking the banks over there, we are looking at the wider impact investing as well, both from the perspective of traditional banking assets as well as the fintech play. And we allocate capital to both of them and with a very, very different lens. And that's what I want to very quickly touch upon, because on the traditional banking side or the traditional lending space, you look at the customer from the perspective of who he is right now and who he has been. Whereas some of the creative lending or the financial innovation that is happening is looking at consumers at what he possibly can be. And that is where the new to credit space comes into the play. And we invest in fintech startups who are trying to play this game. For example, Rise, which is trying to build a peer-to-peer lending platform, which is targeting non-resident Indians, trying to remit back to their countries and assisting financially other members of the community. That's financial inclusion. On the other side, we have another entrepreneur which came to our doors seeking for another round of capital infusion, and what he's trying to do is trying to democratize lending, and that's what Kashi is doing, trying to focus on new to credit consumers, looking at that segment which has just joined the workforce and perhaps requires credit, but the traditional banking is not being able to accommodate him, specifically because they are looking at who he is right now and his history, which he doesn't have. And that is where I think private participation of investors such as ours lead to a lot of investment in these pockets, whether it's fintech innovation around the banking or new banks, or for example, investment in technologies such as consumable banking, and that's how investment in these technologies is helping us. There has been a mad rush around cryptocurrencies as well, but as rightly pointed out by one of my fellow panelists, the size of the supply of cryptocurrencies is, I think, almost $500 billion, whereas if you look at the gross money supply globally, it exceeds 100 trillion. So it's a very, very miniature part of it. Is it creating value? Of course, yes, it is. Where? Perhaps in the payment space. But why is there not widespread adoption? Perhaps because of challenges such as offboarding is a major challenge. A lot of regulatory restrictions are not allowing a lot of exchanges to spur up, which can reduce the problem of offboarding. But we look at technology being adopted in the financial services space as an inevitable innovation that will happen sooner or later, and then that is going to fuel the manner in which financial inclusion is happening. I'll give a quick example here, and then I'll pass it back to you, Tanvi. So we Growmore Group have a security token, a cryptocurrency which is listed in index, and it's completely under private circulation. What we have done is we have created this base, and then we have certain projects where we will have a company on top of it, and the shares of those companies will be securitized against this particular asset token. And that allows a smaller investor to participate in an otherwise large project. And since it's listed on Windex, we give the liquidity and therefore allow a much wider participation of the financial community members. So in some form or the other, innovation is happening, and inclusion is happening, both from the perspective of cryptocurrencies, bringing in a few more retail investors into the economic contribution of these projects, or innovation led by the dynamic entrepreneurial class that is trying to get some fintech creative lending space, peer-to-peer lending, or for that matter, peer-to-credit lending, that is leading to an incremental inclusion in the financial markets.
But Shayan, I wanted your view on this as well, especially from the perspective of how we here in India see it. Yes, we're beginning to see signs of activity pick up in various data points that are coming across. Obviously, we're not out of the woods yet. We're far, far away from it. But do you think that the contraction we saw could have been avoided? That this level of damage, whether it's comparison to our peers here in Asia or some of the Western countries?
No, I actually think that we have done remarkably well in managing this. Nobody imagined at the beginning of the crisis that a country as diverse as India and apparently less disciplined than some of the other emerging economies can actually shut down. And nobody ever thought that the Mumbai locals will actually stop.
Yeah.
So, initially, though there were some marginal differences between some state governments and the central government, etc., we thought that very soon died down, and people worked as teams, central governments and many state governments, including the more controversial ones. So, shutting down was really a tough decision, which happened under the leadership of the Prime Minister. People agreed to it, and the 23.9%, and sort of I underline the figure 23.9. It is not 25, so let's not reduce it to 25. So it was 23.9. That is very obvious because for 2 months the economy was shut down. So, as we see when we talk to clients and when we see the so-called proxies of the economy, and we are all talking under control of Dr. Subbarao because he's much more knowledgeable on these subjects and he has monitored them directly. But we clearly see that, economy is coming back on track in terms of proxies. And as you see, there is something in markets called trending. So when things go bad, everybody trends to that side and say, oh, things are terrible. And when things turn around, people start saying, oh, it's improving a lot. Right now, we are seeing the bullish trending. So a lot of people are revising the growth, projections for Q3 and Q4. In fact, there is an expectation that Q3 itself will be a positive growth. What we are hearing from clients is, yes, there would be definitely a bounce back in the sector. That's what even media seems to be reporting all the time. So I think, we have managed it fairly well, and the shutdown has allowed us to manage the weak infrastructure we have in medical systems. So by making available beds, making doctors more knowledgeable, and we have come to a situation where we are actually having negative cases on a net basis on a daily, and there are a lot of facilities which were created in large cities anticipating a havoc kind of a situation, which are going completely unutilized because of the good management. So I personally think that we have managed it extremely well. It we overdid. We sort of did better than expectation. Even a lot of developed countries didn't expect us to do so well. There was a skepticism, and in the British press and the American press, they kept doubting our numbers till a very recent past. I think we have done well, and I think the green shoots have already started coming out. Can it reverse a little bit? Yes, of course. It may not be just one way. It may go a bit back and forth. But in my view, the worst is over.
Okay, no, I think there wouldn't be any denying the fact that the worst is over. But Sudipto Day, to what extent can the improvement be this year? Technically, we are in a recession, if you go by the legit definition. But are you as gung-ho as everybody else that the next 6 months will get us out of the woods?
Sure. I mean, I think I'd like to answer this, bring into our mind a bit of big data or artificial. So in US, like if you think of the GDP, the number GDP, right, it changes very slowly. Like, is it picking up, all the activities that's happening in the economy immediately? Most probably not the case. It's like it moves very slowly. So in the US, like basically there's a real time tracking of GDP, right? That's been constructed. I'm sure like some of those similar measures will be out there in India as well. I'm not like again I'm not the expert in that region, but now in the US it has shown that this, if you track the real time GDP, which takes into account a lot of real time data across different platforms, that has bound back. So my thought process for India would be like, if you track the traditional GDP, you might see a different trend. But what's actually going on really in the ground, how things have evolved, is would be also more interesting to watch. And my impression would be, with the lockdowns, as Sayan mentioned, I completely agree. Like, it's a totally different problem in the US versus India, and India has always been very innovative, right? If you think of the mission to the moon, the amount of money India spent was less than the movie, that the Hollywood movie to make the mission to Mars or things like that. So, like, I mean, when there is like resource, like there's not like so much of resource, like let's say for a development, but and then people come up with innovative ideas, right? I mean, for sure, Indians are definitely some of the smartest people in the world. As you can see, like so many CEOs in the US are Indians. So I think definitely, did a great job in terms of, given the challenges of the process. But like, just to play a devil's advocate, I'd say if you compare versus China, right? I mean, like again, the data from China is a big question. I don't even want to go there, but maybe a few takeaways is the whole centralized versus decentralized actions in this sort of crisis, and the ability to act fast when you have a centralized approach. I just raise them as questions. Like, do you think in fact, rather than me commenting, I might be actually more curious to hear from Dr. Subbarao and even Sayan, who have spent so much time in India. Like, do you think those are factors which might help in the country's control for COVID-19, like a centralized versus decentralized government, and reacting fast? Because from an international perspective, like if I read the newspapers here, like the thing that they was projecting is the mass migration of laborers, right, from the the urban cities to the rural areas. Now, again, like there's always a bias, in the news that's shown here, because I would say, like, when we had our mission to Mars was successful, it didn't show up in the CNN front pages. It was at the very end, but in some bad news comes up from India, it's in the first page. So I get some biased news when I'm reading news here. So I'd like to actually ask this question to maybe Sayan and Dr. Subbarao.
Well, Sudipto, bad news anywhere makes it to the front page. That's how news really sells, unfortunately, in any part of the world. And
people like to read that.
What US is facing and struggling is US is not the only one to talk about biased news. It's a problem across the country. Unfortunately, I am representing that industry there, but I will admit that is a huge problem across countries, even when it comes to news reportage. But that being said, migration or reverse migration was, of course, a big problem in our country. And there is no denying the fact that no government actually saw it coming the way it took place. But of course, it was an unprecedented time. Not even the bureaucrats would have known, the most experienced bureaucrats would have known how to handle a pandemic and how to handle a sudden lockdown for a country as huge as ours. And so we learned as we went along. And perhaps in this case, when it came to the migrants, the delay time was a lot more. We reacted faster to what the industry was facing during the lockdown. We reacted faster to what the essential services and those companies were facing, and how to change our rules and our guidelines to help them to enable essential services to come right up to our doorstep. We didn't react as fast, but we managed to, in a couple of months, yes, take care of that. Many of those have actually already come back to the big cities. Shayan would know, Mr. Das, that a lot of these migrants obviously have now begun to return to cities like Mumbai, Bengaluru, and elsewhere, because there is work now, and construction has begun, manufacturing has begun. All around us, we see, those in various kinds of services here. The migrants from Uttar Pradesh and Bihar and even Bengal have returned. So yes, that could be seen as a sign of activity, economic activity beginning again. Let's move on to the other aspect and the next conversation point. And this is actually one where I want to hear from all of you. Rahul Vishal Sinha, let's start with you. The youngsters in the audience want to hear from all of you experts about the ramifications of the crisis that we saw in 2008, and if there were actually any lessons learned or countermeasures put into place to avoid that kind of a mishap. Not too many of them would actually have tracked it live when it happened in 2008.
Sure. Yeah, that particular recession was pretty personal to me. I was in ground zero back in 2008. I was working for a mortgage bank. And as everybody knows, the whole thing started with the big implosion within the mortgage industry. So, yeah, I mean, the bank that I was working for, IndiMac, went bankrupt. We got taken over by the US government. So we went through that entire cycle. So I actually saw the entire market grow, the entire company grow. I saw the bust, the complete default, and then subsequently we got bought by, you must have heard of this guy called Steven Mnuchin, the current Treasury Secretary of the US. So yeah, he ended up buying our company, and I had the opportunity to work with him for a couple of years. So definitely that was one wild ride as far as I'm concerned. But I mean, that's on a personal level, and that gave me some perspective to life. Got to grow a little from that. But having said that, I mean, to your question about what ended up happening, the one thing that I want to talk about before I jump into this is describe what the problem was.
Yeah.
So one way to think, especially for the students who are out there, let's say that I'm looking to buy a house. Say the cost of the house is $100,000, and I got $20,000 in my pocket. I put that as a down payment, take $80,000 of a loan, and here I got 100,000 to make the payment for the house. Well, what was happening during that period of time is the down payment of $20,000 that I was making continued to shrink, and the rates were lower. The government kept pushing for I mean, a larger portion of ownership by consumers. And what ended up happening was, instead of making that $20,000 of loan down payment, I was, as a borrower, I was making 5,000, 1,000, and subsequently even zero, to the point where some of these mortgage programs were allowing you to actually have a negative payment in some form. So it was pretty similar to the tulip mania. If the students want to just go research, check that out. Effectively, that's what was happening here, and the home prices continue to just spike up because of this great demand. But effectively, if nobody is making any down payment, and at the end of the day, they are unable to make that monthly payment on that mortgage, where the music has to stop at some point. And that's what happened in 2008. The problem was that there was 3 to 5 years of bad mortgages sitting in all the banks. And by the way, to throw another wrinkle onto this whole dynamic is, I'm unable to make a payment on that mortgage, and then there are people, there are banks who are unable to collect, and there's zero value in coming from my side. So effectively, if the bank takes over my home and then flips it in the market, they're not going to get any money back, and losses will start accruing. But on top of that, what happened is these banks, they're taking these mortgages and they've sold it into the insurance companies, the pension funds, and all these other participants who are basically capital providers in the global economy. And guess what happened? The insurance companies were in trouble. pension funds were in trouble. The consumer was in trouble. And when the consumer was unable to make the payment, they were unable to buy vehicles, cars, and so on. So effectively, that very quickly percolated into the entire economy. So basically, that was the problem that we were looking at. So effectively, it was leverage. There was just too much of leverage in the real estate market, and the government had to come in. They had to bail out everybody, banks. They had to bail out manufacturing. They had to bail out insurance companies. So it was all across the place, and it was pretty dark days as far as I'm concerned.
Yeah.
But coming out of that, the bank did what they did. The government, as they came in, they did the bailout. They ended up also bringing in a lot of regulations to ensure that this would not happen in future. And effectively, the pendulum of regulations just swung from one end, from deregulation to all the way to full regulation. And as part of that, there was some of those regulations were mostly focused on items such as ensuring that the banks don't fail again. And to achieve that, the banks were basically exposed or they were forced to different types of tests to ensure that this doesn't happen. Effectively, they were asked to make their will so that if something like this happens, there's a predefined path for them to go through. And on an annual basis, they would have to go through those tests. So effectively, the government converted these banks into similar to a utility company, like an electric company, where they couldn't take any sort of crazy bets, if for the lack of a better word. So things like that happened. In addition to that, the government also introduced a regulation to protect the consumers so that any sort of aggressive or predatory lending was controlled in some fashion. So there were a lot of these types of steps that came in. The government took over companies such as General Motors on the auto side, Chrysler. These were auto companies, and you'd think that what have they got to do with this? But well, they were selling cars to these guys, and they went bankrupt because they had other types of problems. And effectively, during this entire process, there was a lot of criticism towards the government that, hey, you're converting this entire economy into a big government economy. Well, the problem was so bad that they had to do something like that. And I mean, there's this question about, hey, the pendulum swung too much on one side. But I mean, if I look at the history, we are looking at 12 years of period of uninterrupted growth. We have seen oil and gas crisis. We have seen Brexit. But during the entire period, we did not have a recession in US. So that speaks for itself in terms of what the government did. Yes.
Okay. So let me.
I mean, the last point here is, I mean, for this growth to be actually interrupted, you actually needed something like a virus to stop it. So I think that's what the government and the economy.
As we were talking about it, and even when the team suggested this
I'm unmuting.
point,
Yes.
struck me that it's
I don't know if
12
I'm
years
audible
since
now.
that disastrous time, Nitin. 12 years since the world economy came crumbling down along with Lehman. So I thought I could hear Dr. Super Rao, so I was a bit excited that maybe we can hear him. But never mind. Nitin, 12 years since that, many of the youngsters who are listening to us right now would have probably been, 8 years old, 10 years old at that point of time. So to put it in perspective for them, what was the biggest lesson that the world learned from 2008?
Yeah, I think the biggest lesson for everyone is how to manage your greed and fear. 2008 was greed building up from consumers who can borrow more, from banks who can make more money by lending, and there was a lot of innovation. Rahul touched upon, all these innovative structures like CDOs, rating agencies were involved. So everyone was making money, and no one thought that things which go up can come down. So, okay, today I can borrow 100, let me borrow 110, 120, but because they were seeing 5 years of prices rising, 20%, 30% every year. I remember I was in Mumbai, and between 2002 to 2008, the house prices nearly quadrupled there. Yeah, so it was a global phenomena. Everyone was part of that, and it was just greed going on until one day someone realized, okay, now it's not happening. So I think it's always the one lesson which we have to learn is how do we manage our greed and fear? How do we manage the risk? Yeah, that's the main, and it can, you can link it back to what we were talking in the first debate, which was around banks trying to go to the rural areas. Why are banks not going there? Because, they try to manage the risk because they know they can't collect the loans. The income levels are volatile. They struggle to beat that. It needs a lot of human power to go and collect. So it's the risk side of the business, which human mentality, which needs to be, kept in check along with greed. That's what I would say.
Okay, greed being a one big aspect, and a big reminder for people in 2008 was that it needs to be kept in check. I think our Reserve Bank of India did a tremendous job. I think in 2000, 2002 onwards, through the crisis, and after that, uh, when Dr. Subbarao was thrown at the deep end of it, just when he took charge in a couple of weeks is when disaster hit the entire world. Dr. Subbarao, let's see if we can hear you.
Can you hear me, Tanvi, now?
Yes, we can. Thank you so much.
Wonderful. Yes, wonderful.
This is wonderful that we can finally hear you. Welcome, a big welcome, and thank you for patiently trying all this while to
No,
fix the issue so that the youngsters can hear you over here.
thank
Dr.
you.
Subbarao,
As you can see, I'm technology challenged with so many people, IITians trying to help me. At last, I got through.
could not have happened at an IIT event, sir. We would not have allowed that to happen.
Thank you.
Okay, Dr. Subbarao, if I can come to you straight, and the conversation we were just now having is telling our youngsters about the lessons we learned from 2008. 2008, just when you took charge and the whole world came crumbling down, and you were the one in charge of tiding us through that crisis. 12 years on, what was the biggest learning for you?
Not so much for me, but I think for the world and for the financial system, for the central banks, for governments, there were lots of lessons. And those go back to what caused the crisis. A crisis as complex as the global financial crisis could not have been caused by a simple or a single cause. There were lots of causes behind that. We had global imbalances, for example. China and Asia was producing, America was consuming. There was a current account deficit in America. There was a current account surplus in China. That should have adjusted in the normal course. That did not happen because China managed this exchange rate, with the result that surpluses were building up in China. They were going to America. Americans were running a deficit. So the first big reason for the global financial crisis were the global imbalances. And we've learned that we need to manage global imbalances. The second lesson we learned was that the hubris in the financial system that caused the global financial crisis. People thought that because of all the quantitative techniques, because of all the financial engineering, risk was conquered. Actually, that did not happen. Banks, financial institutions, indeed central banks, governments just lost track of risk. Then there was the issue of central banks themselves. They were focusing too much on price stability. The theology, the orthodoxy, the belief before the global financial crisis was that if central banks took care of price stability, financial stability and macroeconomic stability will follow as automatic byproducts. That did not happen. In the event, a huge financial instability, the cancer of financial instability, was brewing in the underbelly of the financial system, and central banks were blind to that. And then, of course, there was a too big to fail issue, which you people must have discussed. So we've learned a number of lessons, and I think governments, central banks, financial institutions, commercial banks have instituted a number of things. Since I'm more familiar with the government and central bank, let me tell you what they have done. First thing they've done is for central banks particularly, what the lesson for them was that you need to take care of price stability, but you cannot ignore financial stability and macroeconomic stability. You've got to keep track of financial stability. You've got to keep it on your radar. So what central banks have now done is they also focus on Macroprudential. They use macroprudential instrument, not just interest rate, but also macroprudential instruments such as loan to value ratio, about how much the exposure to individual institutions, etc. So that was the first lesson learned for the central banks. Then to fix all this too big to fail issue, all the risk adventurism in financial institutions, there were the Basel III guidelines. We had the Basel I, Basel II, Basel III guidelines, which raised the capital requirements for commercial banks so that they can withstand a shock, so that they can absorb a loss without transmitting it to the rest of the financial system. So that was the second big lesson learned. Then there was also this, in order to prevent financial institutions, especially big banks, misusing their too big to fail strength. You all understand what too big to fail was, right? Of course, all of you are working in financial institutions, but some of the audience may not know, which is that the financial system is all interconnected. If one big institution fails anywhere, that failure will spread across the entire financial system and the whole financial system will come down if that big institution comes down. So that's a source of strength for the big financial institutions. Their belief is that, look, we can make all the gains, we can take as much risk as we want, we can make all the money, all the gain will be ours. But if there's a problem, if there's a failure, governments and central banks will not allow us to fail. They will come to our rescue. So there was a very perverse incentive for them. One of the things that central banks and governments have done after the crisis is to fix that perverse incentive. That big banks are now required to hold a much higher capital than other banks. So those are some of the things that have been done: macroprudential policies, Basel III guidelines, central banks focusing on financial stability and macroeconomic stability, and big institutions not having the perverse incentive or too big to fail. So those are some of the lessons we learned. We're still learning. A lot of people have asked me, so see, look, we've learned a lot of lessons. We've instituted corrective mechanisms. Is it then true that we've completely ensured the financial system there'll never be another crisis? Perish that thought. There'll certainly be another crisis. Some of you must have read this book, This Time is Different, by Rogoff and Reinhardt. What the central message is that over 800 years, every financial crisis has been caused by the same fund going away. Yeah, people losing track of risk, central banks not controlling risk. Therefore, for 800 years, we've done the same thing. We repeated that mistake in 2008. So we have instituted as many corrective mechanisms as we can, but there'll be different mechanisms. A crisis will come from a different source. So we cannot be sure that there will not be another crisis, but we've reduced the probability of another crisis. But, I just heard you discussing cryptocurrencies, that there could be a crisis from excessive leverage in outside of banks. The 2008 crisis was caused by excessive leverage in banks and financial institutions. But there could be excessive leverage outside of the financial system in corporates, which is the fear now, that if there's excessive leverage in corporates, that will transmit to the financial system. So I've misused the opportunity that you've given me to speak at length, but I hope that I've communicated some of the messages. Thank you, Tanvi. I'll stop here.
Oh, absolutely not, Dr. Subara. I think everybody just wants to hear from you right now. We've been talking, for a while before you joined us. So in fact, if I can follow on what you just said, which is about over-leveraged corporates, even smaller enterprises, and the challenge that I don't know how many in our audience know, but the challenge that our banking sector has faced in the last 5 to 6 years has been about bad loans, non-performing assets, and how we've tried to gradually clean that system up until we fell into this hellhole of a pandemic and a recession that's only made matters worse. There was a lockdown. The government has now come out and announced a series of measures which are largely borrowing schemes, or lending schemes, so to say. Is there a concern, Dr. Subbarao, that of uh, how should we manage this from here on as we try to restart economy, as the banks are asked to lend more? They're obviously risk averse to doing that. Is there a concern of how we handle it right now?
Oh, it most certainly is a concern. What we must recognize that we had a problem even as we entered the crisis. It's not as if we were our economy was in the peak of health when we entered the crisis, right? If you throw your mind back to last year, our growth was declining. We had high fiscal deficits. And most importantly, for the purpose of this discussion, our financial system was in a bad shape. NPS were high. And because of the efforts of the Reserve Bank of India, the government of India, and banks over the last several years, we thought we were coming to grips with the NPA problem when the COVID crisis hit us. But the NPA ratio will certainly go back up. By how much, it's uncertain. The Reserve Bank's financial stability report, which came out towards the end of July, talked about the NPA ratio, which was 8.5% end of last fiscal, that is March 2020, going up to as high as between 12.5 to 14.5% by the end of this fiscal, that is March 2021. Now that's a significant deterioration. Will the situation be better? Will the outlook be better? Will the outlook be worse? We don't know. What we do know for certain is that the large corporates, big industries, have been able to withstand the shock and come out of it. But the small industries, the medium industries, the MSME sector, and the informal economy, they have not been able to withstand the shock. It is the MSME sector that has largely accessed the restructuring and the moratorium offered by the commercial banks and by the Reserve Bank of India. So we don't know the true NPA picture right now because of the forbearance given by the Reserve Bank of India.
Yes.
The NPA picture might actually be significantly worse than what the current numbers show. We will know the true number only when the forbearance is completed. Therefore, we must understand that the NPA picture, the bad loan problem, which was improving before the crisis, before this crisis hit us, will come back up. What do we do to resolve that? There's no easy solution. But one silver lining is that the large corporates, as I said a short while ago, have withstood the shock. Government must extend support through the MSME sector. They've already done that by way of credit guarantee, etc. But I do hope that this budget, which is coming out in about a month's time, will extend further support to the MSME sector. It's not just to support the MSME sector, but I believe that supporting the MSME sector and supporting the informal sector has larger implications for growth and for inflation and for the long-term growth potential of the economy. I'll stop there.
Okay. If I can just follow up with one more question, and then we'll open it up for our panelists also to come in as well. Dr. Subbarao, where we stand right now is again a point where it's extremely imperative that we do whatever we can to boost the growth and revive the economy. But the challenge of a high inflation stares at us again, and the retail inflation doesn't seem to be going down. And so, as is the tricky decision for any central bank to take a call on interest rates basis these two factors. Now, for me, if you could just give me 30 seconds to put it in perspective for our audience as well, because the question that has come through is the correlation between the economy and the credit policy of our central banks. How do you walk this tightrope, Dr. Subbarao? Yeah. There is an infamous face-off that happened between, when you were the RBI governor and then the government and the finance minister. Mr. Chidambaram was famously quoted as saying, "If I have to, I will walk alone," to which you responded, "Towards the end of your term." But, sir, that kind of a tussle always continues between the Reserve Bank of India and the government. As we stare at it now, what should the Reserve Bank of India be doing to balance that between growth and inflation?
Tanvi, thank you for that question. I must say you're very well informed. Can you hear me?
Yes, I can, absolutely.
The central dilemma for any central bank, particularly for the Reserve Bank of India, is to manage the policy tension between supporting growth and combating inflation. Even in normal times, even in a benign macroeconomic situation, that's a big challenge. At times like this, or at times like the global financial crisis when I was in the Reserve Bank of India, that's particularly sharp. And that's the case today. Instead of talking about the 2008 crisis, let me respond to your question in the context of the current crisis. The Monetary Policy Committee, the MPC of the Reserve Bank of India, which met earlier this month, decided to pause on rate action, although inflation was well above the Reserve Bank's inflation targeting mandate, and is expected to be well above the Reserve Bank's inflation targeting mandate for the rest of this fiscal year. The MPC explained that they have not taken any rate action to combat inflation because of concerns about growth and financial stability. They expect that in the weeks and months ahead, the economic situation will soften, that inflation will decline because supply side constraints will resolve themselves with the winter crop, the bumper winter crop will come into the market and soften inflation. They also hope that recovery will pick up steam. I hope that will happen, but I want to say that that's not inevitable, both from the growth side and from the inflation side. Take growth first of all. We've seen that the first quarter number was a contraction of the economy of nearly 24%. The second quarter number was a contraction of 7.5%. There was a lot of relief, celebration that the contraction of the economy was not as deep as we feared. But my concern is that the Q2 number perhaps overestimates the extent of recovery, because that number was based on limited data and questionable methods of estimation. That's the first problem with growth. The second problem is that the growth number that came out in the second quarter captures the performance of the large industries. It does not capture the performance of the MSME sector and the informal sector. As I said a short while ago, that's the sector that is worst hit. So when the growth numbers capture the performance of the MSME and the informal sectors, perhaps the recovery will be less flattering. And take the inflation side as well. It's quite true that the Reserve Bank expects that the supply side constraints will be resolved, but there are demand concerns as well. The core inflation is also high, and inflation might in fact firm up in the weeks and months ahead because import tariffs are already high and they might be increased in the budget. That will cause inflation. The inflation expectations, which have been high, might get generalized into core inflation. So for a number of reasons, growth may not be as high as we expect, and not growth. Recovery may not be as robust as we expect, and inflation may not soften as we expect. So the Reserve Bank has a dilemma ahead of itself, how to balance the concerns about supporting growth and controlling inflation. As all of you are quantitative guys, you know that there is one objective. There are two objectives: support growth and control inflation. But there's only one instrument: interest rate. So how do you manage two objectives with one instrument? You've done linear programming. To manage two objectives, you need two instruments. So how do you manage two objectives with one instrument? And that's the challenge for the Reserve Bank of India, indeed for central banks around the world. I'll stop there.
Okay, very well said. And thank you for being so frank about it. The fact that we discussed this, the kind of growth data that we are looking at, and also have to keep in mind that a lot of data, micro points are not getting reported. So we don't know the real picture that will only perhaps become clearer to us a few months down the road. If I may just very quickly talk about financial inclusion, and Mr. Shayandas, I wanted to bring you in on this as well, to the point that Dr. Subbarao was also making. At a time when our banks are averse to lending, we also don't know what the true picture is about the status of the loans, because there's a forbearance. We're not allowed to label the bad loans as bad loans for a few more months. Does that hit the progress of financial inclusion, of reaching out, of bringing more people into the system, of lending to people, in far off places who may need it, or even simply expanding for the banks?
Yes, I mean, for some short period of time, it's likely to happen. And again, I am talking under the control of Dr. Subbarao, because he has massive experience in this field. So for a short period of time, till the crisis gets over, it's likely to happen. But I would look at it slightly differently. And what I would say is that ultimately, a lot of it comes to capitalization of the economy, capitalization of the banking system. And there we have been a bit fortunate that investors haven't lost faith on India. So even at the peak of the COVID crisis, we have seen, for instance, Indian banks, even small banks, raising a reasonable amount of capital. I think, counted it, worked out to some $8 billion, including some NBFIs as well. Yes, there is no doubt that the marginal players will suffer, and there would be shakeouts, there would be consolidation, and we have seen that already happening with Lakshmi Vilas Bank.
Correct.
And that's part of any market economy. So will everybody be equally affected? Definitely not. Will there be inequalities in the society? Yes, there would be. But would the system collapse in general? Would investors lose faith in the Indian economy and go elsewhere? I don't think so, because a capitalization exercise, which we saw during even peak of COVID, we saw that large banks and even mid-sized banks managed to raise a very significant amount of capital, and could have probably raised more if they were flexible on pricing. So I think, to answer your question, in the short term, there would be some blips, definitely. But also keep in mind, there are now more institutions catering to those needs. So you have, as opposed to 10, 15 years back, now we have, microfinance institutions. Now we have small finance banks, which again, credit goes to RBI and the government, that they have been opening up those sectors gradually, to the common man in India. And in fact, I would urge some of the students to read both Dr. Subbarao's book, Who Moved My Interest Rate, and also Dr. Abhijit Banerjee's book called Poor Economics. And you would see how some of the steps which are mentioned in the book, which are like opening bank account for everybody, creating insurance for the poorest of poor, direct transfer to the accounts. Those have been done by successive governments very well. And sometimes I find it very amusing where Dr. Banerjee comes in the middle of some controversy. A lot of people don't realize that lot of stuff which he has mentioned in the book are actually being implemented by the government as well as RBI. So I would say that as long as large businesses are well capitalized, for the long term stability, it's fine. But I think whether there will be short term blips, definitely there would be. And somehow we have a very perverse economy. So in India, poverty will coexist with prosperity of the markets, like many other emerging markets. So that would be my limited take. I think again, as I said, I speak under control of Dr. Subbarao.
First question says, Indian government has more than ₹1 trillion in loan from RBI. How does this affect the Indian economy? If the panel could really talk about it. Dr. Subbarao, would you like to take that and explain to our audience?
Yes. The RBI balance sheet has the government securities on the asset side. Okay. There was a time before all of you were born when the RBI used to directly finance the government. Okay. RBI doesn't do it any further. Now the government borrows in the open market, and the interest rate that the government pays on the loans is presumably discovered in the market. Okay. So the RBI does not lend directly to the government. However, the RBI does buy bonds, government bonds, in the open market from the banks and other institutions which hold government securities. That the RBI does for the purpose of managing the market, managing the interest rates in the economy, managing the liquidity, in order to manage inflation, in order to support growth, in order to ensure that the financial system is working. Sometimes the RBI also intervenes in the market in order to ensure that the government borrowing program goes through. So it is true that on the RBI balance sheet, there are, on the asset side, there are government securities, but that is not because the RBI lends directly to the government. It is because RBI has bought bonds from the government. Let me also say this because it is important to understand that when it comes to the brass tacks, the RBI and the government run a combined balance sheet. Okay? It's like the wife and husband, they have different incomes, different bank accounts, but when it comes to the crunch, they have run a combined balance sheet. Similarly, the RBI and the government run a combined balance sheet. So if the RBI holds government debt, it's not much of a deal, because if the RBI is paying interest on that government debt, it has less surplus, less profit, and therefore less to transfer to the government. So in a sense, it does not matter how much of government securities the RBI holds, but for the purpose of letting the financial system run along market lines, run along competitive lines, it's important for central banks to keep away from financing the government directly, let governments borrow in the open market, and for the purpose of liquidity management, intervene in the open market to buy or sell government securities. That's what every central bank does. That's what the Reserve Bank of India does.
Okay, if I can take up the next question, and this is actually would be interest to a lot of people who are listening to us right now. Kindly highlight the opportunity part for financial inclusion. What mindset or approach should students have in order to move towards growing the economy for one and everybody?
Yeah. Okay, am I back on? Okay. No,
Yes,
I
sir.
like this question. I think it's very important that somebody has asked this question. And let me spend about 2-3 minutes on this, okay? First of all, what do we mean by financial inclusion? 15 years ago when I was in the government, financial inclusion meant just giving a bank account to every household in the country. Okay? Because financial inclusion is not just giving a bank account to every household in the country. Financial inclusion is providing access to every household in the country to the formal financial system so that they have an opportunity to improve their incomes, to improve their livelihoods. But when the bureaucracy took over the problem, it got translated into giving a bank account to every household. So bureaucrats from the government and banks opened bank accounts, but people did not use them, nothing happened. Why? Because there was a mismatch of incentives. What banks wanted out of financial inclusion was access to the large pool of savings of the poor people. They thought all these savings will come into their banks. That will be a float for them. They can increase their profit. On the other hand, what poor households wanted was that they wanted credit. They wanted microinsurance. They wanted remittance. So banks were looking for savings. They were not interested in giving loans or microinsurance to poor people. Poor people were asking for credit and microinsurance. They were not interested in savings. In fact, saving money in a bank account is expensive for them. There was this mismatch of incentives. That was the problem. That was the big challenge for financial inclusion for the last 2 decades. Then over the last 7-8 years, something magical happened. That magic was the slow coming in of digital technology, slow at first and rapidly after that. Digital technologies. We've captured that in India by this acronym. You must have heard of that JAM, J-A-M, JAM. J standing for Jan Dhan account, A standing for Aadhaar, M standing for mobile. The Jan Dhan account, no frills account that the government offered to poor households, no minimum balance, minimum KYC, no transaction cost. That did not take off for a long time. Suddenly, what was the magic? The magic was the government said, we're going to transfer all the subsidies. We're going to pay you the employment guarantee wages. We're going to pay the pensions through bank accounts. So people became anxious about opening bank accounts. And that became possible because of digital technologies. Then A, in the JAM, the A, Aadhaar. Of course, Aadhaar was magical, something that we should all be proud of as Indians. The biometric 12-digit biometric demographic-based identification number to every resident in the country. In a country where nearly 25% of the people. Yeah, where not more than 10% pay income tax. Most people cannot prove that they exist. Aadhaar was a magical thing. And the mobile phone, of course, when it came 10 years ago, I was skeptical myself about mobile phone technology and about the costs. And over the last 10 years, penetration has been very deep, and internet costs in India are among the lowest in the world. So very poor people, illiterate people, are now able to do banking that shame us. My maid tells me, sir, pay me through Google Pay, and I can't do that. She knows how to use it. So because of this JAM magic, JAM, we have not solved, but we've gone a long way in financial inclusion. But the second part of the question is what I liked. What attitude should students, the audience in this, must have? I think as much as technology helps, as much as bureaucracy helps, what is important for financial inclusion is a mindset, is the empathy for the poor. You must understand the culture, the psychology, the anthropology of poverty. Somebody referred to Abhijit Banerjee's book, Poor Economics, right? So what he says is this. The World Bank defines poverty line as $2 per day. Okay? But poor people don't earn $2 per day every day. That's their earning on average. Their income is irregular, uncertain. They lose their jobs. Their death in the family, illness in the family. They have to celebrate festivals. So they have uncertain, irregular income. They have to even it out. So how do they do that? The impression is that poor people don't know how to manage their money. Perish the thought. They do very sophisticated financial engineering. And you've got to understand that. A poor woman in a village might actually hide 5,000 rupees in some rice tin and borrow 5,000 rupees from a neighbor or from a money lender. And all of you financial sector experts, we believe that that is irrational, right? Why do you hide 5,000 rupees away from your husband? It's plain stupid, right? But she still does that because from her point of view, it's rational. If a child falls ill at 2 o'clock in the morning and she's to take the child to a hospital, hire a van and take her, that 5,000 rupees is a safety net. So poor people do very sophisticated financial engineering. Don't impute your sense of rationality, your sense of logic, your sense of balance sheets, your sense of understanding on the poor people. They're very intelligent, very pragmatic, very rational from their point of view. Okay, I'll stop there. I've got more stories to say, but I'll stop here.
I've got more questions to ask because the audience members are constantly sending us questions. But this is one question that I think everybody wants to know the answer from you, Dr. Subbarao. And before we lose that connection, apart from your insights about economy and the financial sector, your most fond memories from the campus?
My most fond memories from the IIT campus is being ragged, and in turn ragging. Okay. Now, unfortunately, ragging is banned now, maybe for good reasons, but a wonderful thing. I recall my IIT days, and it was a wonderful way of getting introduced to the IIT culture. And my other memory is of IIT as youngsters between 16 and 20 talking about girls. Okay, that's the memory I carry.
Sir, which hall of residence were you part of?
I didn't want to embarrass you, Tanvi, but yes, those are my enduring memories from IIT, Kharagpur.
Shayan Das has a question for you. Go ahead, Mr. Das.
Sir, we were wondering which hall of residence you were part of.
Which hall of reckoning were you part of?
Me?
Yes.
I was in LLR hall, proud LLR.
Okay.
Yes.
Well,
We can hear
I
you
think
now.
that's a very interesting question. If I take it across to a couple of other panelists as well, Sudip, today to you as well, your most fond memory from the campus?
Oh, sure. Yeah, there are lots of fond memories, but I think the one I realized the most was sitting on the mess top. I'm sure you all understand the mess top lingo. Basically, we have the open roof on top of the mess. You sit there with your friends and you chat, and then the canteen is right by the side of the mess top, from where you can order things like aloo and the bread bhujia. Those are the good old days. I definitely, miss those times.
What part of your campus days, Nitin or Aruna, do you carry as you travel across the world?
Yeah, um, nostalgic. Yeah, I think the part which I miss the most is when Diwali comes around and Ilu time. We used to have the fabulous architecture which used to make with diyas, and I remember for the first time when I was there at Patel, we had a guy Shivendu Johri. He made a 3D rangoli. It was one of the most beautiful rangolis which was made in IIT until then. But because it was 3D, we were disqualified. But yes, come every Diwali, every year, wherever I am, it reminds me of all the work we used to put in and how beautiful IIT used to look at that time.
Okay. I've also got one question, and I think our audience wants to hear from everybody on this specific question. Among the various kinds of ups and downs, various crises you would have seen, what are the characteristics that you feel surge an individual through it? Animesh, let's start with you. We haven't heard from you in a bit. Amongst the crises that you would have witnessed, what one characteristic can help surge an individual through it?
Well, I joined the workforce at the helm of the global financial crisis, um,
Yeah.
and then Middle East faced a debt crisis a couple of years afterwards, um, and then the oil crisis happened in 2016, where the oil price went down to around $20, and then the pandemic, of course. So through these particular four crises, what I have observed, um, for an individual and for a corporate both, is that the perspectives around risk and rewards really matters on the investment side. And my fellow panelist Nitin had mentioned about this concept of greed and fear. And those are the two little voices in your head that constantly keep creating noise and distracting you, and the manner in which you manage both greed and fear is what survives you through the various cycles, because opportunities are born of these financial crises. Um, all the financial crises, including the oil crisis or the global financial crisis, led to a suite of opportunities that were born out of it and created massive value in the subsequent years. The current pandemic also is going to create massive uh, value as an outcome of the storm that everyone is going through. So I think, in my opinion, greed and fear um, management for managing yourself as well as your portfolios is what has been the defining thing across these.
Okay. Mr. Rahul Sinha, would you you shared with us your personal experience from the 2008 crisis, but one characteristic that you believe, Mr. Sinha, that helps people power through?
Sure. And this is something that I tell my kids also. It's basically universal. I basically have been inculcating these three rules: stop trying, number one, and number two is use your brains. Number three, practice, practice, practice. And I mean, you can change these words in any fashion or any form, but effectively, that's what everything boils down to. I mean, you'll be exposed to any sort of adversities rather than crying over the spilled milk. Just think about what are you going to do rationally, and there's going to be fear. You have to just overcome that fear and do something about it. And doing something is not a one-time thing. It's not a 100-meter sprint. It's a marathon. 2008 happened. I saw bankruptcy in my company. We were it, it was a question of do you have a job or you don't have a job. You just work through it, and then after that, it's simply continuing working over and over and over again. I mean, it may not be uh, fashionable, but effectively that's what ends up helping you out.
Yeah, yeah, absolutely, absolutely right there. Mr. Nitin Arora, would you like to go next?
Yeah, I think these crises are very difficult times. I came to London in 2008, so I was welcomed by Bear Stearns, the demise of Bear Stearns in March, and then a few months later it was Lehman. So I think it's very easy to go into the negative spiral at that time. So one thing, if I have to say, is just control your emotions, don't go into negativity, and think about all the positives you have done and your colleagues. We are very privileged that we have such an alumni at such good places. We can look at them and bring some positivity in us in these times of difficulty. So controlling the emotions, negativity, and looking at the positive.
I thought you were saying reach out to your colleagues or your alumni, and they're going to help you. You have such, the IIT alumni is, at such great places across the world that every time you're in a tough spot, just reach out to any one of them.
One of them, Sundar,
Any one of you
we
guys.
have
Yes.
Dr. Rao here, and then Mr. Pichai.
Oh yes,
I
absolutely.
tell you,
uh,
that's what we have to look at.
any part of the world you go, you will find, stalwarts from IIT. Sudipto, day to you, and then to Mr. Shayandas. Yeah.
Sure. I think like two characteristics that I think are very critical. One is grit, I mean, which is in a way explained by what Rahul, Nitin, Animesh have all been talking about. It's basically not giving up and continuing. So I'll put a little bit of my personal perspective. Like, I joined Goldman Sachs in November 2009 in their mortgage trading desk on the asset management side, November 2009. Now, before that, I did a PhD in mechanical engineering, and I was working for Cadence Design in the Bay Area, like doing circuit simulation, very different. And then when I land up there, it was like, just post the crisis. And the first thing the partner there says me is, here are a bunch of subprime mortgages. Your job is to figure out the loss severity, for the collateral. So it basically, people, like, the one thing that people were starting to look at the collateral of such subprime mortgages in so details at that point, whereas it was overlooked, before. Because it's like the thing, I guess many of us are mentioned, when things are going up, it's like all rosy, and there's always an overreaction, right? And everything is great. And then things when are spiraling down, it's really bad. So when COVID-19 happened also, we are a huge fixed income fund in Lord Abbott now. We have like a lot of money market funds. Like we had huge amount of redemptions coming from retail investors. And, like many of you know, that commercial paper, which is like the short term borrowing that high grade corporates use, it froze up. So, like all to tackle all those periods, it's essentially you need a lot of grit, like, to hang in there. The other important character, I think, is emotional intelligence. Now, you all are studying at IIT, like your IQ level is definitely on a very good side. But, how do organizations, or how do, teams do great? By just being a good team, like where people trust each other and they work collaboratively to come up with something greater than just adding them up, the whole synergy. Now that comes with trust, and for one of the big components for that is emotional intelligence. Like think of me, I was a quant, I had a PhD, and then now I'm interacting with the portfolio managers who are very good, with some of the fundamentals, like they have like good gut feelings, So how does this two very different approaches coexist with each other? It's emotional intelligence where you need to realize that the other party can have very different perspective, and you interact and you talk in a very different, toning down your approach to everything. I'd stop there. I guess these two are the one I consider very valuable.
I completely agree with you. In fact, I would have also said teamwork for sure. When times are tough, it's easier to power through when you're together. Whether if it's a personal crisis, it's your friends and family. If it's a professional crisis or a nationwide or a global one, then it's always your team. Mr. Shayan Das, to you next, and then we will go back to Dr. Subbarao.
Sure. So I think, other than the softer aspects some of the panelists mentioned, I would say two things. A is, most of the time, strangely, the crisis is, a result of a very bullish phase in the market. If you observe, it is not only business cycle, there is a fundamental reason to it. The reason is that we move away from fundamental analysis and we go by herd instinct, and people tend to follow each other. So in essence, what we want more younger and sharper people to do is to do a lot of conventional analysis and also never hesitate to challenge the result of those analyses. Never go with the herd, have an individualistic view, be a contrarian. And I would highlight one term which was sort of coined by one young journalist like you, Tanvi, during the GFC, about the GFC, which is the toddler in the pool syndrome. So what they meant was that just like a toddler is in the swimming pool and the dad is thinking the mom is looking after him and the mom is thinking the dad is looking after him, this is exactly what happened in the subprime mortgage crisis, that nobody was watching the underlying asset. And they moved so much away from conventional wisdom by creating synthetic structures and selling it over and over again, many times more than the actual supply of the asset, that it created a bubble. And again, Dr. Subbarao can add to that perhaps. So my limited point is that conventional analysis, which is fundamental analysis, always has its strength. So the fundamental credit analysis, whether a counterparty is financially strong, whether they are in the right business, whether the cash flows can support credit, whether they have enough security, those analyses have to be undertaken at all times. And if those analyses throw up results or make you doubtful, don't forget to challenge herd instinct, which is happening across you. We need more contrarians in this market. So that's what I would summarize that as.
Don't forget to challenge the herd instinct. That's a great takeaway that Shayan Das has given there. Dr. Subbarao, the same question to you. Among the crises you've seen, what are the characteristics that you feel surge in individuals through it?
Well, it's easy for me coming in last to say that I endorse everything that others before have said me. They're all very important. From my own perspective, let me say that when you're in a leadership position, especially if you're in a leadership position in a public institution like the government or the central bank, it's very important to be transparent and honest and communicate. And that's easier said than done. I learned it the hard way. Okay. Let me give an example. For example, during the crisis, around the world, including in India, there was lots of news. We did not have this term fake news at that time, but there was lots of rumors about certain banks coming under pressure. And the Reserve Bank had inside information about which institutions, which banks were weaker than others, which might be more vulnerable. The dilemma for the Reserve Bank was, should we level with the market? Should we level with the public and say that these banks are vulnerable? Or should we hide that information from the public? That's a very difficult call to make. Because if we say that such and such a bank is vulnerable, there will be a run on that bank and on the rest of the financial system. On the other hand, if you don't level with the public and you don't tell them what the problem is, you're denying them the time and opportunity to make the adjustment. Okay? So every leader, in whatever context, whether in the financial sector, corporate sector, in the public sector, government or NGO, how do you communicate, especially in a crisis situation, is very, very important. And the confidence with which you do that is important. So I can tell you stories about it because lots of people ask me, if you would, it is one thing that you would have done better, which would you do differently if you had, go back in time. I would say that I would have communicated better. Okay? Because people who've analyzed my record, my tenure, have said that I did not exude sufficient confidence. And I said, I can give you lots of stories about it when I look back on that. About the 2013 taper tantrums. At that time when the rupee was falling and the Reserve Bank was trying to defend the exchange rate. We were doing all the things that the textbooks prescribed. We were invoking the experience of the Reserve Bank of India and central banks around the world to manage the exchange rate. But yet it did not work. And I used to have internal meetings with my senior management. And some of them, indeed all of them, used to say that, look, when you speak, you should be even more confident. So I think being transparent and honest and communicating at the appropriate level is very, very important in a crisis.
Do you think you're doing enough of that, Dr. Subbarao, now? I mean, and thank you for being so frank about what you thought during your time, whether you communicated it enough. But is the central bank or even the government right now communicating enough?
It's difficult for me to pass a judgment now on the government and central bank because I'm not an insider, and much less you don't expect me to pass a judgment in an open forum like this. But I must certainly say that communications, both in the government and in the central bank, have improved. And that's partly because of the lessons they've learned, partly because it's forced on them. Okay? Because if you do not communicate and say what your perspective is, what's the right issue, there is you're allowing wrong information, misinformation to inform public opinion. So it's very, very important for governments and for central banks to manage communication and to inform correctly at the right time. So, over the last several years, we've seen the Reserve Bank of India manage problems in banks, PNB first and then Yes Bank and Lakshmi Vilas Bank. I thought they'd managed the communication very well. Even the government in the current ongoing farmer agitation, they're managing the communication very well. We've seen cabinet ministers come on the TV and say their point of view. See, you cannot expect them to say everything. For example, 2 days ago, I saw on some news channel whatever that institution is, I can't get the exact acronym now, but that institution which is supposed to approve the vaccine. Okay? They were still trying it. But the TV anchors are saying, why are they not communicating with us? Give them some time. Give them time to do the sufficient testing. You can't put fire under their feet and say, just because we got to catch the 9 p.m. news, say something about it. You've got to allow them time. So just as much as leaders must understand the need for communication, media people such as yourself should also understand when to demand information and what sort of information. I think that's very important as well. I'm saying media because the way you demand information influences how public demand information. Okay? So I want to put that out as well.
Point very well noted, Dr. Subbarao. But I must say that I was a cub reporter when you were, the RBI governor. We used to run around trying to, get response from you. But I do remember a lot of my fraternity who were very closely tracking banking sector, extremely, disappointed and heartbroken to see you go when you did finally in 2013. So you definitely did a good job answering our questions at that point of time. On that note, I am completely out of time, but it's been a wonderful conversation. Thank you so much to have for all of you for joining us on this, Dr. Subbarao. I'm glad you didn't give up and you got that connection going for us, and you did join us. And thank you to all of our other panelists as well, Dr. Nitin Arora, Animesh Saxena, Rahul Sinha, Shayan Das, and Sudip Tode. Great to have you, and I'm hoping that the audience also had a great time. I'll hand it back to Ramajot from the Students Alumni Cell. Ramajot?
I hope that this small step by IIT Kharagpur must have ignited a spark amongst our audience. And I would also thank our esteemed panelists who have taken out time from their busy schedule and made this event a huge success and made this evening a memorable one for all of us. And I would also like to thank the audience for being a wonderful audience. Thank you all. And now I would like to play a video by our associate Mirror Now, our exclusive news channel partner. It's about mental health. Mirror Now basically is organizing a mental health awareness campaign to spread awareness about the topic and help others to understand what the thing is and cope up with it. With that, I would like to conclude today's session and thank you everyone on behalf of Students Alumni Cell. And we hope to see you again on 19th of December, 6 p.m. with another session of Leadership Summit 2020 and all new set of our esteemed panelists. See you soon.
Thank you. Thank you, everyone.
Wonderful meeting all of you. Thank you, Tanvi. You're a very mature and intelligent reporter now.
Thank you so much, Dr. Subbarao. It's awesome to hear that from you. Thank you.
Bye-bye.
Thank you, everyone. Bye.
Thank you.
Yeah.